So there's a big gap there between 20% and 30%. We also know all three automakers have essentially said from the beginning that a 40% increase would effectively bankrupt their business.
The lowest price target is, of course, from notorious bear Gordon Johnson, who has a $33 price target, which is ridiculous, and then it totally messes up the rest of the average.
Someone's buying a new car, whether it's a truck, an SUV, a smaller passenger car. In their heads, they're thinking, is this my last ICE vehicle or is this my first electric vehicle? So it's become a consideration in all purchases.
Where does Tesla stand? I mean, to the people who are the naysayers for Tesla, what do you tell them?
All that and more, so let's get to it. Tesla stock down in the pre-market almost 0.5%, trying to climb back from that immense sell-off yesterday. For the week, Tesla is still up about 0.5%. The 3-month looks terrible, down almost 12%. Year to date, however, still over 100% gains. If we go back a whole year, Tesla is only down 2%. And for and giggles, the 5-year chart is still amazing, up over 1,100%.
What do we know about this new proposal?
Well, we know it's its 7th and, in the view of Ford, its strongest offer yet. We also know it offers record pay and benefits. The CEO says it's an offer that is costly for the company, but Ford believes that it's one that believes it to allow for the future and in a future that it can invest in and grow. The proposal boosts its wage increase for permanent workers to a record 20%, also increases benefits such as contributions to 401k, as much as 5 weeks vacation and income assurance, or what is called layoff protection. That means no job losses due to electric battery plants. The whole EV issue is a serious one for the union. The offer also includes a reference to new product commitments. Now, the devil may be in the details here. The CEO, Jim Farley, recently criticized the UAW as wanting to determine the way it runs battery plants that are not even built yet. And yet in this latest proposal, Ford now appears to be making concessions, or at least easing concerns in this regard. Ford says it remains open to the possibility of working with the union on future EV battery plants, but that these are, quote, multi-billion-dollar investments and must operate at competitive and sustainable levels. You may recall that last week, Ford drew fire from the union when it stopped work on a Michigan EV battery plant, which is a $3.5 billion investment. Ford also said it made its latest offer late Monday night, and while it did not put a number on the wage offer, it says that this increase would actually put the UAW represented jobs among the, quote, top 25% of all U.S. jobs, hourly and salaried, in terms of the amount of pay.
Let me go ahead and clear that up for you guys. The offer is the strongest, yet is not going to move the needle for the UAW. Nothing's changed. Whatever deal Ford, GM, Stellantis strike, it's going to hamstring them pretty good. I believe the best bet here is to just give them what they want, operate under this new normal. But apparently things have to get worse before they get better.
So where do we go from here?
Well, obviously, the UAW will take a look at this and come back to them. What we do know is that the UAW initially asked for a 40% pay increase. According to reporting by Bloomberg, sources close to the negotiations say that the union actually wants to emerge from the strike with at least a 30% pay raise. So there's a big gap there between 20% and 30%. We also know all three automakers have essentially said from the beginning that a 40% increase would effectively bankrupt their business, and so raising that pay level is a serious block for them. In terms of some of the other issues, it's clear that Ford has come up, as it said, from its earlier proposals. It's also important to notice that you've got 25,000 workers now on strike, 19 days in. There have been a number of layoffs and furloughs by all three automakers. In fact, Ford now announced they are laying off an additional 300-some workers. That brings to well over 900 the amount they've laid off so far. And there are already concerns that even though the latest sales numbers for the third quarter show an increase in cars sold, that there are concerns that this strike, as it has continued 3 weeks now, could impact and will likely impact the supply chain issues for the auto industry.
Scott, we've got Q3 sales for General Motors going up 21% compared to the third quarter of last year, with EV sales jumping 28% compared to the second quarter of this year. Why are we seeing increased sales? A big part of it is better production. The supply chain has improved year over year. As a result, GM's inventory at the end of the third quarter, the strongest since Q3 of 2020. That will be relevant as the UAW strike plays out in the days and weeks to come. One last note, GM, Scott, says that it sees Q3 sales for the industry overall in the U.S. at 15.5 million vehicles. That's an indication that the consumer has rebounded considerably compared to where it was in Q2 and last year.
Some pretty strong numbers coming out of GM. I like it, but I don't think the UAW will.
Let's focus on the automakers, starting with Tesla. We know deliveries came out yesterday. Now, what did the analysts say after those deliveries came out?
Right, Renita, so we are seeing the fact that Tesla did report, I would say it was pretty much in line with expectations. It wasn't necessarily a super negative or a super positive result, coming in with around 430 deliveries, 435 that had been shipped, so 435,000, excuse me. So we did see Tesla make a slight move to the upside, but it was somewhat of a very muted reaction, as it didn't seem like the street was that excited or, again, that disappointed, which is actually something considering last quarter we saw some pretty steep selling the day after they released their deliveries. All in all, I think that was a positive result. No selling was seen as a positive. So we did see Deutsche Bank say they could be optimistic here about the next quarter. Analysts still really like this name, although I will say that of the 50 or so analysts that are covering Tesla, it's very split. We do have some sells, we have some holds, we have also some buys. The lowest price target is, of course, from notorious bear Gordon Johnson, who has a $33 price target, which is ridiculous, and then it totally messes up the rest of the average.
You could say that again.
So, analysts still like this name, and we saw analysts across the board either maintain their coverage or raise their price targets. But again, a muted reaction feels almost like a positive reaction from those delivery numbers. And so I think that is the optimism we're seeing in shares. Tesla also has broken down over the past month by about 20%. So right now, with that bar being relatively low, I think that's also setting the stage for what was a pretty muted reaction. Shares are down about 1 3/4% here off the open, though.
And yeah, it was a little bit of a non-event, but let's switch over to the big three automakers who we know have all been trying to be competitors in the EV space at some point. What's the latest with the UAW strike, though?
The latest with the UAW strike has been interesting. So we did get some updates from the president of the UAW that was on Friday that said they will be consistent with what has been occurring so far. So now we enter week 3 of course, these ongoing strikes. We have seen the fact that Ford and GM, we did get news yesterday from the Wall Street Journal that Ford and GM are laying off about 500 factory workers as the UAW strike effects now ripple out. So late Monday, Ford did say it idled 2 factories that supply parts to these sport utility vehicle assembly plants in Chicago, where workers did walk off the job on Friday. Work stopped at the stamping plant near an SUV factory in Lima, Ohio, resulting in the layoffs of about 330 employees. The problem here is it's the supply chain effect. So when you have various factories that are closing due to the strikes, and you have another factory that closes due to the lack of parts, and then another factory closes due to the lack of work. So that's something we've seen. Around 15% as of Friday of Ford and GM's total production had been shut down as a result of the strike. I think at this point, meet these people's demands. I mean, this is something that's going to be a major concern. We already had profitability concerns for GM and Ford going into these strikes regarding their EV businesses, which Ford's expected to lose something of like $3 billion on an annual basis to build out their EV business. So at this point, they cannot afford to lose more money and continue to weaken their balance sheets. This is something I think that needs to get solved. And I also think, consider the inflationary environment. All we talk about about is rising interest rates, the rising cost of living, the more strapped consumer. Consumers right now can't afford to be out of the workforce for 3 ongoing 4 weeks. So my heart is now with these people that have been out of employment for ongoing 3 weeks. That would be a very difficult financial position, I'm sure, to be in. So I think reach a resolution. It doesn't seem, though, as we have much updates regarding a resolution, unfortunately, between these two, the UAW and the Detroit 3.
And with neither side budging, really, it's clear that it's going to have to be a lot of compromise either way.
Compromise and pain. Quite the damned if you do, damned if you don't situation for the Detroit 3. RJ, how's the strike going down there in Rivian? Whoa, there's no strike?
Rivian coming up after reporting better than expected third quarter deliveries, but Wall Street's not celebrating. So what's it going to take for investors to buy into an EV future? Phil LeBeau joins us now with the CEO of Rivian, RJ Scaringe, at his plant in Normal, Illinois. I don't think anything's normal in Illinois at this point, Phil.
Central Illinois, Joe. We'll leave it there. RJ Scaringe, founder and CEO of Rivian. Right off the line, as you have your R1Ss that are rolling off right now, let's talk about the demand that's out there. Better than expected deliveries in the third quarter. Are you seeing any weakness or any areas that give you cause for concern with the consumer right now?
Yeah, well, we saw, between Q2 to Q3, we've seen a significant step up in deliveries, of course, a step up in production. And really what that's embodying, what we see, is just a deep interest in the brand, the products we're building. And ultimately, as we think about like long-term path to electrification, what we say all the time, what I talk about, is that today, if someone's buying a new car, whether it's a truck, an SUV, a smaller passenger car, in their heads, they're thinking, is this my last ICE vehicle or is this my first electric vehicle? So it's become a consideration in all purchases.
Is this my last ICE vehicle or is this my first EV? We're on that precipice, ladies and gentlemen. You're going to be on the fence within the next 3 years purchasing a brand new vehicle.
And for us, this is really exciting because, we launched with our flagship products, but our future products are what we call our R2 platform. Will really fit in nicely with that growing demand base.
But are you seeing any drop-off in average transaction prices? And I'm not looking for a specific number, but you have a high average transaction price, well over $80,000 per vehicle. And we know that we're going into price-cutting mode within the EV industry. Are you noticing any erosion?
We've as you know, we've maintained our pricing and the demand for the products is very strong. So we've been able to keep that consistent with what we've had in the past.
That's one hell of a political answer, but let me break it down for you. Rivian is losing money for every one of those vehicles that are coming off that line right there. With that being the case, you can't drop the prices even if you wanted to. They're only going to produce 50,000 plus of their vehicles for the entire year. To put that in context, Tesla has delivered over 400,000 vehicles this quarter.
You've got an average loss of almost $33,000 per vehicle. And you saw the Journal article yesterday, and people are saying, well, when are you going to be profitable per vehicle? You've already said by the end of next year. Are you seeing acceleration in bringing down those costs?
Talk about burning cash. This graph right here sums up the absolute difficulty of trying to be profitable when producing battery electric vehicles. Once they become profitable, this will be a company to look out for.
This is our Q2 results. We had a loss of about, as you said, just over $30,000 per vehicle. That is improving quarter over quarter. So we're seeing significant progress. And what we're going to see as we go forward is a very clear staircase or set of steps that get us to profitability as a business. And of course, that's the objective. And the ramp of our production plant is really foundational and key for that.
You've got about $9 billion in capital on hand. You've said you've got enough to get to R2. Are you still comfortable with that?
For us, as we think about building out the business, that's not just ramping production, but building our service infrastructure, building all of our go-to-market activities, parts distribution, making sure we efficiently deploy capital is really a key focus, while we simultaneously balance that with all the ramping and growth initiatives we have. Of course, that being our next set of products with R2 in Atlanta. So we're very cognizant of maintaining a strong balance sheet, but we haven't really commented on how we think about the capital markets.
But still comfortable with your last guidance?
We're very comfortable with the fact that we've maintained a strong balance sheet. That's something we'll plan to continue to do. And it's really important for us because there's such a big opportunity in front of us. We don't want to be in a position where we're capital constrained, to be able to not grow as quickly as we see as the opportunity.
When you look at the R1T, and I know the R1S is more volume than the R1T, but the Cybertruck is coming at some point next year. Ford's next generation Lightning is coming. Is there too much saturation coming when it comes to the electric pickup truck?
Don't worry, RJ, I'll field this. Electric vehicles aren't competing with electric vehicles. They're just a little over 10% globally when you're talking about new car sales compared to internal combustion engines. The runway is long when you're talking about the buyers for electric vehicles. There's plenty of room for everyone to be successful in these early days. Sorry, RJ, didn't mean to step on your toes there.
You know, if you were to look at the different products that are coming out in the truck space, and for that matter, just broadly within the electric vehicle space, we think it's really, really important to have choice, to have selection, and to have variety. So, you know, the Cybertruck, I think it's great for the world that something like that exists. It's very different. There's not going to be a lot of overlap, we believe, in our customer set between, you know, a customer who's buying a Cybertruck and someone who's buying an R1T. So it's really good that something that's so different and so unique exists. And we need that across all segments at all price points. And this is why, you know, I say all the time, I think competition is really valuable for mass scale electrification.
It's stop trading. Most oversold since the spring when we bounced. So keep that in mind. It's from the SP Oscillator. David, I think that we want to take a hard look at Tesla because this is, you know, we had a Bernstein note saying not going to make the numbers. Yesterday we had a Deutsche Bank number saying not going to make the numbers. And the stock hangs in. What does that say? It could mean that some of the higher growth, high multiple stocks might be able to try and make a stand. I've got Macy's tonight. I've got Paychex tonight and Oshkosh. And I refuse to be as negative because, boy, it was good to be negative 2 weeks ago. Now you're with the crowd. You're with the crowd.
So you're thinking of bucking the trend here.
I just feel like, as in my screed about Kimberly, which is a company that I don't particularly love, but they do have a name brand. I think these companies, their brands are worth something. They're not just playthings that are being tortured by the tenure.
Oh, snap. Even Jim Cramer says stop trading on Tesla. Will Cramer be correct? Will Tesla reverse its oversold trend?
We got these delivery numbers from Tesla, and when you look at them sequentially, a little disappointing, but still year over year, you're seeing the growth. What did you make of it?
Yeah, I mean, Nicole, I just view it year over year. It was strong, especially relative to this environment. The price cuts are working, specifically in China. And if you look at the factory downtimes, this sets up what I believe is going to be a very strong Q4. And I think that's why the street shrugged off these numbers, which clearly were disappointing.
You know, when we talk about, people start comparing other makers, like Rivian, for example, to Tesla, because they get excited and they're seeing Rivian on the road now. But, you know, Rivian delivery 15,000 plus to Tesla's 435,000 plus. Rivian's probably going to come out with 52,000 vehicles this year versus 1.8 million for Tesla. I mean, is Tesla still, I mean, I know BYD is on its heels too. Where does Tesla stand? I mean, to the people who are the naysayers for Tesla, what do you tell them?
Tesla's in a league of its own, reaching across markets globally with a heavy hand. Doubt and short Tesla at your own risk. There is no lifeguard on duty. The potential value of Tesla is growing by the minute, even if the stock price remains static or drops. Every second that passes is adding more tension to that coiled spring, which is Tesla stock. There is no telling when the stock will vault. You can bet your bottom dollar. You'll know when it happens. Question is, will you be along for the ride?
I mean, the scale and the scope is unmatched globally. I think when you look where Tesla is, I think, look, one of the biggest risks, if you look at the thesis, was GM, Ford, Detroit. That was going to be competition in the U.S., but now this UAW debacle, that's actually been a win for Tesla. I think when you look in China, price cuts, that price war has happened, BYD, NIO, and others, but Tesla's actually gained share. And I continue to think going into 2024, they're in a massive position of strength. despite a shaky macro.
And when people say that Tesla trades more like a tech company versus an auto company to try and justify the valuation, I mean, you have a 350 target. It's at 247 today. Tell me why the valuation is justified.
Well, I mean, Nicole, you've talked about this a lot. I mean, we view it as a disruptive technology player, not an auto company. I think if you look even at the sum of the parts that's now starting to play out, supercharger, battery, ultimately FSD, AI, what separates Tesla from others, it's really the software and what I view as the secret sauce, which is non-hardware. And that's why more and more, I think investors are starting to understand this is not an auto company, it's disruptive tech. I believe it deserves that multiple that I think it continues to attain going 2024.
Right, right. I mean, that's the whole point. And that's why, you know, I ask you these questions because I get bombarded sometimes like, oh, full self-driving is so far away. Batteries, they don't really make batteries. They do it in collaboration with other companies. They're not really a battery company. They're not an AI company. It's just an auto company, and it's not worth the current price.
Does anybody else get the sense that she's traumatized by Gordon Johnson yelling in her face? A torrent of nonsense seems to have been sticking with Nicole, our anchor here.
Do we have actual statistics of any sort of how many batteries are made, that they really are growing in AI, that there really is potential?
I mean, look, I've spent a lot of time at Tesla factories around the world, as well as other factories. And that's why I think it's very easy to be bearish on Tesla sitting there in your spreadsheet in New York City. I think when you see what they're actually doing, that's what's separating. And I think again, that's continued to be a differentiator.
Go visit the factory. Go check out Austin. Go to Giga, Nevada. You don't believe that they're making batteries? You don't believe that they're a leader in the tech space? Just sit in the damn vehicle. Go for a ride with FSD engaged. Go see firsthand what they're doing. Because if you're using Gordon Johnson as your metric, you might want a second opinion.
Yeah. I mean, the Cybertruck is coming. That should be an exciting addition too, right? When you talk about the orders that line up for that, right?
Yeah, look, we believe production begins later this year, deliveries into next year. And that's just going to be another, I think, when you look at their product portfolio, that's just going to add to the growth. It's going to add to the moat that I think continues to play out over the coming years. Look, obviously, we're going through a white knuckle period in terms of multiples, in terms of disruptive tech. I think we go into next year, I view it that this is kind of the next phase of the Tesla growth story.
Yeah, and I know, you know, Tesla is not unionized like Ford and GM and Stellantis. They get basically shares and such, right? I mean, they get shares of the company, and that's sort of the carrot that Elon Musk puts out there to make sure that they don't unionize. What do you think of that?
I mean, look, the debacle that's happened in Detroit with the UAW, that's really been a torpedo for the Detroit Big Three in terms of what, you know, what I viewed is it's going to be a pivotal year in terms of 2024. Tesla's never going to have unions. And I think that continues to really be one of their strengths in terms of how they built it, how Rivian's built it. And I think the sad thing right now is that the winners, in terms of what's happened, this UAW cage match with the Detroit Big Three, it's Tesla and it's the foreign automakers that are going to benefit.
Your mother. Right. Tesla will never unionize, and dare I say, Rivian will never unionize. You've seen their chart to profitability. Once they break that threshold of profitability for their vehicles, that'll be a huge testament to the workers that are producing those vehicles. They will be handsomely rewarded with their stock options. The harder you work, the more money you potentially could make. That's not the case with GM, Ford, Chrysler. Legacy auto is at a dead end, while the innovation for battery electric vehicles is just beginning. I like to imagine the EV startups in a hot air balloon, soaring off into the sunset, looking over the horizon at brand new ventures. GM, Ford, they make EVs, but they're being weighed down. It's like they have balls of pig iron attached to their hot air balloon basket, preventing them from soaring as high as they possibly can. They have to deal with that heavy pig iron that encompasses everything about the legacy auto business, from dealerships all the way to the UAW. For the legacy automakers to survive, they're gonna have to cut some dead weight. In conclusion, the Detroit Three's gotta figure something out. The longer you wait to close this deal, the more contentious your workers that you absolutely need will become. The UAW and the Big Three are going to have to work together to survive this transition. It's already gonna be hard enough. RJ Scaringe and crew are doing everything necessary to make Rivian a player in the future. And once you become profitable, there's no looking back. Well, if Big Brother Tesla is any indicator. But don't get it twisted. Rivian and Tesla are two very different companies with two very different product roadmaps. With all the irons in the fire that Tesla has, it is truly unfair to compare Rivian to Tesla. That's all I have for you today. Be easy. Peace.